Namaskar viewers, hello and welcome to Sansad TV. I am Tina Jha, you're watching Perspective. The OPEC Plus alliance of oil exporting countries have agreed to cut production by 2 million barrels per day beginning November. Members of the oil producers group, which includes Russia, are saying that they want to stabilize prices which have fallen in recent months as the world economy slows. The cut marks the biggest reduction by the group since the height of the pandemic back in 2020, when OPEC members slashed output by 10 million barrels per day. Also, it comes despite countries, including the United States, which has repeatedly asked the organization to increase oil production after oil prices skyrocketed due to the Russia-Ukraine war. Now, a reduction in output will inevitably impact oil prices around the world. How significant will the impact be on global energy markets? What ramifications will it have on geopolitics? This and related aspects in Perspective today with an illustrious panel of experts. So let me begin by introducing them to you. Pleased to welcome on the program Ms. Kate Durian, Contributing Editor, Middle East Economic Survey, Professor Charan Singh, CEO, EGROW Foundation, former Ambassador Neeraj Srivastava, and Don McLean-Gill, Resident Fellow, International Development and Security Cooperation. Thank you to all my guests for joining me on the program today. Ms. Kate Durian, let me begin the program today with you. So this will be the biggest production cut by OPEC Plus since the height of the pandemic in 2020. Explain to us and our viewers what's behind this decision of the OPEC Plus.
Oh, there's quite a few factors. I mean, there was fear. We were seeing demand destruction because of high prices. The world is on the cusp of recession. Spare production capacity was eroding as production was ramped up. But I think what this production cut really does is it formalizes the gap between the target of the OPEC Plus and actual production, because there's a lot of members within the group who are unable to produce at quota because of past inability to invest in new production capacity. So it was already, it just formalizes it. And I think the market was expecting this cut, maybe not a cut of this size, because it was factored in. So we haven't really seen a huge leap in oil prices since the announcement was made. But I think it was also deliberate that OPEC Plus wanted to have an in-person meeting for the first time since the COVID pandemic, and sort of send a message that these are sovereign states. They will make decisions based on their economic needs, and they will not bow to pressure from the United States or any other. But I think it's, it remains to be seen how the market develops, because inventories are quite low, relatively speaking, in historic terms. So I think the market was tight, but it wasn't that tight on the supply side, even if, despite sanctions on Russia. But we have a lot of uncertainty coming up as well. We've got the price cap, which comes into effect at the same time as the EU ban on Russian oil imports. You've got the products ban that comes into effect in trade. So we don't really know how that's going to impact trade flows, how it's going to impact the market. So there's a lot of unknowns. So we expect that there will remain some volatility in the market for some time to come.
Professor Singh, how do you look at this action of the OPEC Plus? How is it going to impact the already struggling global economy?
So my view is a little different, and if you permit me some time, I'd like to explain. The OPEC countries have reduced, and rightly so, by 2 million barrels because the price of oil has plummeted from nearly $120 to a barrel to $80 to a barrel. Now, it is obvious that everybody will be catering to their local constituency. President Biden has said that midterm elections in November are due. So President Biden would like prices of oil to be as low as possible. He is catering to his constituency. The OPEC countries, and I have had a chance to interact with them, and I'm sure Ambassador is going to speak on this, but when I was at the IMF in Washington, I had a chance to interact with them during my tenure there 2009 to 12, and I realized that the OPEC countries are very clear, and they were telling me that the oil under the soil belongs to the future generations, so they would like to get the best price of it. Otherwise, they are answerable to the future generations. They're also answerable to the past generations because of which the oil is there. So they are catering to their own constituency, and they feel that the price of oil has really dropped rapidly from 120 to 80. Secondly, they also feel, and I understand that the world is entering into a recessionary phase. When the world enters into a recessionary phase, it is obvious that the energy demand is going to go down. And when the energy demand goes down, prices obviously will go down. So within their right, the OPEC countries who said that, look, we want the price to stabilize somewhere, $80 is too less, and we think the optimal price is little higher. But I want you to step back and think a little bit more. Why is the recession coming in? The recession is coming in basically because inflation is very high in the US and Europe as well as in England and Euro area. Everybody is suffering from severe inflation and therefore they're raising the interest rates. OPEC countries are saying that because you're raising the interest rates, recession is setting in and we are getting impacted. Then the issue is, why did the inflation go up? And there have been economists like me who have been saying that the Fed had expanded its balance sheet rather very rapidly. When 2008 had happened, they had doubled their, four times, not doubled, four times expanded their balance sheet from what it was in 2008 to 2012. And then when COVID happened, they doubled it again. Now, so much of money supply has been pumped into the system, and economic theory says that when you pump in so much money supply, eventually it will land up in inflation. There has been a trigger. No doubt Russia, Ukraine is a trigger. But this was bound to happen and happen as quickly as possible. It was already too delayed. Similar thing had happened in Britain and similar thing had happened in Europe. All of them expanded their balance sheets rather tremendously, very recklessly, very aggressively. And now when they're doing the correction, they have the wherewithal, they're rich enough to handle the sacrifice. The growth will come down, unemployment will increase, whereas countries like ours are going to suffer because of this step being taken by those countries. Now,
Certainly.
there have been economists again who had been telling from 2005 that the subprime lending and the asset-backed securities, ABS, and mortgage-backed securities are not really good for the world. They're too complex derivative products. 15 years down the line, they've come to roost. So I think APEC is giving their own arguments, and to me as an economist, they look logical.
You're right. So, Ambassador, from the economics of it, let's move to the politics of it. It's not going to have an implication just on the global energy markets, on the prices. It's going to have ramifications also on the geopolitics. How do you assess the already volatile situation, especially when it comes in the context of geopolitical situation today?
This particular move sends very important geopolitical signals. First, point number one, the United States had asked Saudi Arabia to increase its oil production during President Biden's visit to Saudi Arabia a few weeks ago. So, and Saudi Arabia is generally seen as an ally of the United States. But by taking this step, the Saudis are sending the signal to the US that we will do not necessarily what you tell us to do, but we will do what we think is in our interest. So that is one fault line. The other fault line is that Europe and America wanted a price cap on the price of Russian oil. Now, by taking this step, that might not be possible to enforce a price cap. And if there is no price cap, if oil prices go up, it will mean that more money will be available for Russia for fighting the war in Ukraine. The third point is that for countries like India, it is, if the price of oil goes up, it is not necessarily a good thing. But those countries which have stayed neutral in this war, for example, India, Russia has offered oil at huge discount. So if Russia continues to do so, then from India's point of view, this may not necessarily be a bad thing. And finally, this shows that all the important decisions which have a bearing on the war in Ukraine, they are not in the hands of the United States and Europe alone. That the effort of the US and EU to isolate Russia and to make things difficult for Russia has not necessarily succeeded.
Okay.
This is the fourth political signal that I see.
Okay, so what's Mr. Gill's perspective? Let me also go across to him, bring him into the discussion and find out, Ambassador, since you spoke about fault lines, let me ask a related question to Mr. Gill. You know, even though the United States and Saudi Arabia are considered great allies, just 3 months ago, President Biden was in Saudi Arabia, perhaps seeking energy commitments from this oil-rich country. Now what we are seeing is obviously going against what the United States had been asking for. It's been pushing back against any kind of oil production cut. But nevertheless, OPEC Plus is going ahead with a production cut. How much of a role or influence do you see Russia having on this decision?
Well, thank you for that question. In terms of the question that you've asked in particular, we have to put this into a geopolitical context, looking into what happens in the past few years. So we look into the Trump administration. So the Gulf states particularly, along with that of the rest of West Asia and North Africa, you know, we could see that despite the proximity in terms of the traditional partnership that they had with the United States, there was a desire to have less dependence on the US in search for more autonomy. Now, the same trend was seen is being seen under the current Biden administration, where the US is seen to be inconsistent in terms of its engagements with the Gulf states and the lack of proactivity because of its preoccupation away from the region. So this, in fact, challenges the interests, of course, of the Gulf states and the rest of West Asian states. Which includes also a majority of OPEC members. So, you know, as we can see, the Saudi Minister of State of Foreign Affairs, you know, he has emphasized that external forces cannot push their values towards a particular country without experiencing some costs. And as we can see, given the inconsistency of US policy towards the region and sometimes the impractical relationship, the continuous rise in ambivalence of public opinion towards the West, and the transition towards multipolarity, West Asian states have been motivated to diversify strategic partnerships for more mutual interests and practicality. So this is where we can see incorporation of Russia, of China, and eventually incorporation of India as another pole towards the potential multipolar era. So as we can see, because of this diversification, weaning off from their dependence from the United States and the West, we can see more autonomy in terms of decision making. So while this was seen as a blow in terms of US diplomatic efforts, we could look at it throughout the lens of a more objective lens in terms of the realization of a fast transitioning geopolitical landscape, not only in the region, but throughout the international system as well.
That's right. And, that's emerged clearly again with the kind of sharp differences we've seen in the geopolitical order, especially since the Russian invasion of Ukraine back in February. Ambassador, a related question, because Mr. Gill spoke about how it has dealt a big blow to the US's diplomatic efforts. Politically as well, coming in at a politically dicey time, just ahead of the midterm elections. It's a huge setback for the Biden administration, isn't it? And do you now expect any kind of countermeasures with the Biden administration actually calling it a short-sighted decision?
It is a setback for the Biden administration and also personally for President Biden, because of what I said earlier, that he had asked the Saudis not to cut the production of oil, because oil prices in the US, gas prices in the US is a very sensitive issue. I have lived in the US, and I know that it is a country which depends on cars very much more than other modes of transport. And any increase in the price of oil, it adversely affects the popularity of the administration. I think already Mr. Biden's popularity, which is already low, is going to might go down further, and that the Democrats might do even worse in the elections, which are about to come in, I think, November. So it's come at a bad time, and that is why Biden had invested so much in this effort to reduce oil prices.
Professor Singh, coming back to the implications it is going to have on countries like India, who are energy dependent. 90% of our energy needs are met through imports, and especially from the OPEC+. You spoke about how it's going to impact countries that have stayed neutral through the course of the Russia-Ukraine war. How significant will that impact be, according to you?
I firstly would like to mention that as far as a country like India, many estimates have been done across the world, both in advanced countries and emerging countries, both by the countries themselves as well as private sector think tanks and multinationals. But nowhere ever has it been mentioned that India could be into a recessionary phase. So I must congratulate the finance minister of the country and the prime minister that they have steered the country so well that while the rest of the world is facing severe fears and probability of recession, in India we are pretty safe. There may be a slight slowdown in growth, as was recorded in the first quarter vis-a-vis what RBI had anticipated, but nobody in the world and nowhere in our country are we anticipating anything recessionary. So that means the demand for oil in our country will follow a certain trajectory. Now it has been already mentioned, and I totally endorse that view, that while India has its own oil, India is also in a very good position. If we are getting through with Russia on the ruble-rupee agreement, we are buying oil at the rupee rate, and we will probably be getting at a concessional rate from Russia. And I think we need to fill our reservoirs and continue our journey of growth, because oil to that extent, energy to that extent is already with us. The third point I would like to mention, and we are taking quite a bit of steps and initiatives in that context, we are thinking aggressively in the renewable sources of energy. As you know, the government has been making efforts on the solar as well as the wind energy, and we are on the solar, certainly we have made big headways. In rest of the world also, fossil fuel is very polluting, and therefore it's also not good for the air and climate, and therefore the rest of the world has also been making efforts on ensuring that the dependence on fossil fuel is reduced and renewable sources of energy are tapped. I think that will continue to happen. In a way, if OPEC has taken this step, then there is this negative side of it, that the world's move towards renewable sources and the need for shifting to renewable sources at the earliest will be felt, and I think research over there will take place at a bigger pace.
Mr. Gill, how do you see this decision impacting efforts by the United States, by Europe, to put a price cap on Russian oil? Will that now be a delayed thing? How does this decision already impact Europe, large parts of which has been reeling under energy crisis? For much of summer, we've seen, and now just ahead of the onset of winter, it's a grave crisis that Europe is reeling under.
Right, thank you. And in fact, you were absolutely right. Europe is definitely reeling under the significant effects of energy insecurity. And on top of that, of course, it has its other branches in terms of food security and socioeconomic welfare, etc. Now, we have to understand that the suggestion to put that cap on Russian energy sources has been going on for a couple of months. But however, there seems to be no fortified plan to be able to do so, because of the implications that could also impact the national economies of European states. In fact, we can see that there is already a mounting domestic discontent towards various national leaderships in Western Europe, in the United States. The inflation rates are said to are increasing significantly, and this would have an impact on the political system of domestic countries. So this is in fact, and with this particular announcement, I think the chances of pushing forward, for this particular initiative would be in fact something that needs to be assessed significantly and critically for the cost of national level politics and international politics. Now, just briefly going over the point that you have mentioned of an alternative, in fact, we have to understand, being the status quo organization for regulation of the oil market, the international oil market, the OPEC members are in fact a little wary, in fact, of efforts such as the United States to really manipulate the current status quo system. I'm sure you're aware of the NOPEC bill, which is being floated around, and in fact, its repercussions for the status quo membership. As we can see, this is also another thorn in the geopolitical architecture of the Western relation with OPEC leadership.
You're right.
So
in fact, political leaders in the United States have already begun talking about the need to reduce, this kind of control that OPEC Plus has on energy prices. Ms. Durian, do you think NOPEC bill is once again back in action, and because this decision has already irked the United States, NOPEC could see some kind of action in the coming weeks?
I mean, that's been going on for years. There's been so much talk about NOPEC. I don't think so, but I mean, the White House response has been quite harsh. And the other issue to think about, it's not just about crude oil, it's about refining, it's about refined products. And I think that's where one of the biggest problems is. We had a lot of refinery shutdowns. And if you look at what's happening in the Gulf states, we have new downstream capacity coming online. So in a way, they might cut crude oil production, but they can expect to export more refined product, which is higher value. And then there's, of course, switching gas to oil. So if you compare crude oil prices to, say, refined product prices, or even natural gas prices, LNG, particularly spot LNG, it's like multiples higher. So crude oil is not really the problem. But I think the price cap, yes, they're talking about it. They're talking about bringing it on in parallel with the EU ban on Russian imports. And I think that will have an impact. Already, we've seen a decline in Russian exports to Europe because of self-sanctioning, because of sanctions imposed by the UK and other countries. So a lot of it is flowing east. I think we don't know how Putin is going to respond in the event that there is a price cap. I think that's one of the main concerns, because, will India and China go along with it? Probably not. The trading community doesn't like it because they see it as interference in a free market, which is kind of broken anyway at the moment. So I think there's a lot of uncertainty. So we're getting these sort of conflicting signals. And OPEC not wanting to control volatility in the market, which was quite high, has, I think, done the opposite. Because a few months ago, they increased production by 100,000 barrels a day after Biden went to Russia, to Saudi Arabia. And then they canceled it a month later and said, no, we're going to decrease again. So it sent very conflicting signals to the market. And I think this one is actually quite a strong message. And it is, even if they argue that it's not a political decision, the way that it was done and the manner in which it was announced, I think there is some geopolitics involved. And of course, Russia would have been consulted, would have gone along with it, because at the end of the day, OPEC Plus decisions are consensus decisions. So if one member country, and particularly a powerful member country, is opposed, then you wouldn't have an agreement. You would have, what we had at the beginning of the pandemic, when it was a free-for-all, when Russia and Saudi Arabia didn't agree. So I think it's changed the dynamic.
That's right, Ms. Durian. And for a country that's not even part of the OPEC Plus, the oil-rich countries, how much influence can that country have on the decisions is, of course, a key question. Mr. Gill, I'll take one last question from you, and this again relates to the energy security scenario, the energy crisis in Europe particularly. Volatility and uncertainty in the global energy markets, the OPEC Plus now deciding to cut down production. That, of course, is going to bring about certain kind of changes in the global energy markets. And Russia, on the other, just ahead of the onset of winter. Do you see countries within Europe looking back to Russia to meet its energy needs, particularly during the harsh winter season?
That's absolutely right. And in fact, for the long term, in fact, European states are seeking to diversify sources of energy. But these efforts will not be able to directly alleviate the short-term and mid-term issues that they may face, particularly as winter is here, and their overdependence, of course, on Russian energy as well. While there have been attempts to cut it down, to diversify, in fact, the pipeline between Greece and it has also been established. But again, these may be for midterm and long-term effects. We could see the effects perhaps in the long term. There's still much work to do to really wean off from traditional sources of energy. And as the short term continues to exacerbate living conditions within Europe, this will also have effects on domestic politics and, of course, socio-economic growth and welfare. And this is where discontent increases. That could also be problematic for the political leadership of these particular countries.
You're right. So even though the OPEC Plus
long-term
claims
effects
it's
are
not a
being-
political decision, it's a technical one, the kind of impact it's going to have on domestic as well as, the geopolitics is something that cannot be ignored. So we've already spoken about the ramifications that this decision of the OPEC Plus to reduce production is going to have on the global scenario today in terms of the energy markets, in terms of the ramifications it is going to have on the geopolitics. So time is running out. I'll have to leave it at that. Thank you, gentlemen, and Ms. Durian for joining us on the program today, sharing your thoughts, your views with us and our viewers. So that's it from us in Perspective today, viewers. Thank you for your time as well. I'll see you same time tomorrow now. Until then, you take good care of yourselves and keep watching Sansad TV.